Hey, Tom here, FlipAnythingUSA. So the Fed hiked the rate again. That's no surprise to me. I think it's going to happen at least two more times. We got 3/4 of a point. Even my two daughters right now are about to buy houses from me, and they got quoted a rate of 6.8. And that was before the raise. That's about an hour before the raise. And so I'm mad at myself. I screwed up. I should have got them in earlier. I knew I was going to sell them these houses, and now I'm going to pay for it because now I'm just going to carry a note for them. I'm not going to let them pay that much. Not that I think it's terrible, but you know what? There's without a doubt. I'll tell you what. It is going to smash the housing market in a big way. We're starting to feel the effects. Inventory's building. We've been talking about this for a couple of months. But you know what? It really hasn't phased a lot of the cash that's out there. And so those inexperienced investors that bought stuff they thought they were going to flip, they're trapped. You guys are trapped right now. And in fact, there's a couple of YouTubers out there that I think made huge mistakes. Ryan Pineda is one of them. He bought this 332 unit, which we'll do a video on that. I got Chris here with me, by the way. Hey, by the way, please hit that subscribe button. I got Chris here helping me with the channel, so things will be getting improving here a bit, or at least I hope so. And we'll be right back. We'll talk about this stuff.
It's the best thing I ever did.
All right, let me get Chris in here. There's Chris. Hey, Chris. Thanks for hanging out, buddy. And also, he's getting a lot of stuff fixed around here. It's nice having another set of hands here in the studio. Chris built the prop you see back here, all these remnants from my past. But, man, I'm excited. We're going to make so much money this year. Chris, I heard you talking on the phone. It sounded like you had something. Selling?
I've always got something, Tom.
Yeah. So, look, Chris is one of the home run students, which if you're new to the channel, you want to check out FlipAnythingUSA.com. By the way, we've got I don't think I can show you exactly right now, but go to FlipAnythingUSA.com and there's a link below for the webinar. Get into the webinar, and
that's a free webinar, and you can attend that at your leisure. Something we kind of cooked up today, but really easy to get to. Really take 15 minutes of your time. It's worth every bit.
Oh yeah,
It doesn't cost you a thing.
And listen, the webinar, it's nothing but money made. It's nothing but profit from the students. You can't beat it. There's no webinar like it. Okay, it's just basically just jump in. Also, I'm giving away a $500 Home Depot card. Right, $500 Home Depot card. So you'll have a chance to win that $500 Home Depot card, which I plan on giving more of those away. Who couldn't use a Home Depot card right now?
We can do that drawing maybe next week. Do it live or something.
And no, it won't be next week. It's going to be in a few weeks, actually.
A few weeks, okay.
Yeah, there's another contest connected with it.
Okay,
but you'll be entered in it either way. Thanks for trying to give my money away so quickly, Chris.
No, but I do have I have a deal I'm looking at right now for myself. I have another deal that might get under contract and assigned to you, Tom, if you want it.
Oh, is that the one you were talking about earlier?
Yeah.
Maybe.
Always looking for deals, though.
Yeah. Well, we'll talk about it.
But these, back to the point, though, Tom, with the Feds raising the rates. Now, again, I was even briefly, before we went live, I was kind of reading through some of these articles, and even the stock market is starting to fall a little bit, as Powell said that the terminal interest rate will most likely be higher than previously expected.
The terminal? I'm not even sure what the terminal interest rate means. What does that?
Well, basically saying like, hey, we keep on hiking this thing, and we thought it was going to do a lot sooner, and they're just not seeing.
No, that's the problem. There's a lot of stupid cash out there, and I can't wait till it's used up. Listen, if you've ever been to an auction, and you'll have a bunch of the same things for sale, like it could be trailers, it could be motorcycles. A lot of I've been to auctions where they're selling the police Harleys. They get a certain amount of mileage, they sell them off. And so what you do is you go there, and the stupid money goes in there and overbids on the first 5 or 10 property, pieces of equipment that are for sale, and then they're gone. And then the remainder of the motorcycles, in this case, they start selling for half of what the first batch sold for, and they're all basically the same year. And so that's why I haven't even been paying attention to the rates, to be honest, because I've already locked in all the money that I need for my lines of credit, for buying stuff. I've got to write like in the 4s on some of my stuff, so I can borrow money at 4%. It's just sitting there waiting for me, and I talk to you about this in the class, and otherwise I tell other people too, you get yourself an RLOC. I've been saying it for a long time, and revolving line of credit. And so that money, you can borrow it, you can pay it back, and you can borrow it again, but you can pull it in and out. In my case, I got it at 4%. Even if it's 5%, even if it's 7%,
and those are locked in for typically a year, Tom, or
2
for
years.
how long?
Yeah,
2 years.
Yeah, they don't like to do it 2 years, but you can get them to do 2 years if you got a little bit of pull.
Okay.
So yeah, it's good. And like Russ just wrote, he wrote, I'm glad I was able to sell in time. Good thing I listed.
It's a good thing he listed his property.
Yeah, absolutely.
And that he listened to you.
I guess. Yeah. Yeah, anyways, so yeah, we got, get in the mentorship if you can afford it. If you can't, I understand. Watch the free stuff. You get a lot of information here. Get my book, whatever you do, get the book, FlipAnythingUSA. I got to move Chris. Chris is in the way of my book. Anyways,
my bad.
Yeah, it's okay. It's not your fault.
And then check out the webinar. The link directly right below. You'll see a link for the webinar.
Yeah, the link below, you'll see FlipAnythingUSA.com/webinar. Go in there, like I say, you have a chance to win the Home Depot card. But number one, you have a chance to make millions of dollars if you can get into the mentorship. If you just read the book. We have several millionaires in the class already in a very short time. People have made over $1 million since being in the mentorship, and it's worthwhile. Anyways,
hey, Tom,
but let's talk about these rates and how it's going to affect things. Go ahead.
And here's the thing, too. For those that are considering getting into real estate investing, they're rookie investors. They want to flip a house. They want to sell something. Maybe they have hundreds of thousands of dollars that they made somewhere else, and they're like, I hear real estate's a good vehicle to.
We have a lot of those guys. Absolutely.
But I can see how some people might be pumping the brakes and be saying like, I don't know if you can really make money in real estate anymore because they keep raising the interest rates. What would you say to these people?
Yeah, well, first of all, anybody that tells you it's a bad time to invest, I would not listen to them. It's always a good time to invest, but if they're talking to you because they don't think you're experienced and you'll make mistakes, then it's fair to say that, right? But listen, I never stop investing. I bought a house a month ago, and I'm just now wrapping it up. It's probably going to be one of my daughter's houses. I've got some other offers out. I'm hopeful. I just missed something that I kind of wish I would have got. But again, the money's getting more expensive. The money's 3/4 of a point minimum more expensive today than it was yesterday.
Yeah, and it's kind of like it's. Well, you show us in the mentorship how to go about making good deals, which is something I really appreciate. But you want to build that capital. You want to take the money that you're making so that you can go make more money, right?
Yeah, absolutely. So look, this is like I said, I haven't even been paying attention to the interest rates. Why? Because I'm not in a hurry to invest right now. I'm waiting for certain things. Listen, this is kind of the order that things happen. Interest rate goes up, people go into denial. The people that are smart, that are trying to offload their stuff, they pretend everything's okay. I'm one of them. I pretend everything's kind of okay to the people that I'm selling to the people I'm offering my property to. Now that my stuff's gone, I don't care. Okay, that's how it works. Right. And so now I talk about as doom and gloom to the people that I want to buy from and say, yep, you better, if you want to sell it, I'll buy it, but this is my number. And of course, it's under market always. I would never pay full market for anything. That's the advantage you have when you do things right and you buy under market. You could buy under market today, and if you want to, you can kind of sit on it for a while and see if the market continues to drop, which it's going to. I would just flip it. Anything you can, just flip it. It's so important. Unless you already have like $1 million or $2 million, then you need to turn it.
This is what we were talking about earlier.
Yeah, Chris was kind of talking out loud more than anything. But yeah, but you're right. We've talked about this before.
It's really attractive because I think a lot of people, especially when they're new to the real estate game, they don't have a lot of money, or a lot of money is, $100,000, $200,000, $300,000, $500,000. That's a lot of money. But a lot of people think, well, if I could just be a quote unquote real estate investor, I could just get this passive income and I could just sit on my rear and not do anything. Well, you're going to be making some money, but it's going to be this much compared to every time you make a flip, it's going to be this much.
Right.
And
so
you want to stack that and really get a lot before you buy and hold something.
Right. And so, like I say, I mean, there's other little complications that come in there. Like right now, if you got something and you're getting 20%, let's just say on 100 grand, so 20,000 a year. It's not a lot of money, but if you sell it, yeah, I mean, the chances are if you're getting 20% on 100 grand, whatever you bought for 100 grand is worth 200 grand. Okay, so if you sell it, you can get yourself 100 grand, because this is the way I look at it. When I buy something under market, under normal circumstances, I buy something under market, 100 grand, 500 grand, whatever, buy it under market. I realize that I'm losing every day that I hold on to that property. I'm lowering my return on investment, because right now, if I make a deal on something, I make 100 grand. I buy it for 100 today and it's worth 200. Okay, if I sell it right away, I make 100 grand, just like that, right? Okay, the longer I hold it, the less I'm making over time. In other words, I make 100 grand in a week if I sell it in a week. If I hold it 3 months, now I made 100 grand in 3 months, right? And then if I hold it to the year, now I made 100 grand in a year. But also I might be waiting for the market to go down. Maybe I'm only going to make 80 now because I held too long. And that's kind of what's going on with people right now is, so you know your situation better than anybody. You've got a good job. Maybe you can weather some storm. Or if, let's just say, you're making 20% on your 100 grand and it's a rental and it's not going to be affected by the market going down, the tenant's going to pay the rent. You're confident that they've got a good job or they got a good business, whether it's commercial or whether they're paying for a house or whatever. So that's fair to say, hey, I'm comfortable holding. And it's okay to hold in a situation like that for one reason, and that is you don't know what the market's going to do, and you don't have anything to buy. So you're going to pay, you're going to pay taxes on the sale if you don't have it, if you can't defer it, which a lot of times that's the best thing to do, to be quite honest, because like right now, I'd probably, if I had a property I just made 100 grand on and I was tight on money, I would sell it, take my lumps, pay, whatever, 35% taxes on it for short term, and plus the Obama tax. And now you got, whatever, 65 grand. 65 grand is going to be very powerful in the coming days, months, and a year, because 65 grand is going to get you a lot more in 6 months than it does today. It's going to get you in the door. There's going to be less buyers. That's what's happening right now. There's less buyers. That's why the inventory is going up on all these houses. And like I say, there's other people that have cash that are coming into the country and or from over state lines that are leaving New York, going into tax-free areas, tax-free states, or states that don't have state taxes. And they're spending up that money, but they have another motivation. They're escaping California, or they're escaping New York, or one of these high state tax states. They're getting away from them. And so they have a motivation. We need those guys to burn up. We need to get that money used up so that they're no longer ruining it for guys like me and you that want to come in, that we want to buy, but we rely on borrowed money. So now, here's the thing. And I mentioned Ryan Pineda. Look, Ryan Pineda has this 332 units. Is that what it was?
Something like that.
He's got this 332 units. He was, creating a fund for and getting people to buy in. And I said at the time, man, why is he doing this? He's got a great little reputation going. He's building stuff. I don't think he's got any great real estate chops. Anybody that talks about doing deals, and doesn't talk about money and profits made, that's a red flag. I'm sorry, it's a red flag. He could straighten it out if he wants to, but that's a red flag. So, but again, everybody's a rock star in good times. I think he's only been an agent, or not that an agent is anything about being an investor. It really isn't. But I don't know that he's even invested more than 10 years, which means he hasn't even caught a downturn yet.
And to point this out, Tom, because you're saying it without saying it, but for anybody that's new that's watching, you don't syndicate deals. You don't take other people's money to, hey, why don't we pull all of our money together?
No,
like
but you know what?
I
I might create a fund someday.
Right, but as of right now, what I'm talking about with FlipAnythingUSA, if you join the mentorship or anything like that, like you're teaching people how to take their own money.
I'm teaching you how to make money.
Yeah.
And like I say, there are some people that have done okay on some funds, but the funds that I've seen offered from Grant Cardone and these others, I'm telling you, they're terrible. I wouldn't touch them.
I looked into going in on. Again, I'm still learning, but I'm learning all the different ways you can make money in real estate. I had the option to go in on this deal with this one guy on a property that I had just acquired. And he's like, hey, yeah, like, let's do this tiny house project and et cetera, et cetera. And we started crunching the numbers and everything. And I was like, okay, I could get my money back. And then I could make $30,000 to $40,000 on this property.
Right.
But it's going to take me 4 or 5 years to make that happen.
Right.
And then I was like, and I really started assessing all my options.
Yeah, it's a no-brainer. Don't do it. Yeah, I mean.
Well, I actually ended up flipping the property, and I made my $30,000 or $40,000
to flip
profit.
it. Yeah, to get rid of it. Sure.
Overnight.
Yeah.
And then I'm looking back, I'm like, hindsight's 2020. I was like, man, I'm really glad I did not partner with the guy and eat up 5 years of my capital.
Yeah. So look, I'll leave these words with anybody watching right now. You can never get hurt taking a profit. You can never get hurt taking a profit. But if you hold out for more, you can totally get burned. You may regret, oh, gee, I left a little money on the table. I could have made, I sold it and made 50, but if I had held a little longer, I'd have made 70. Listen, if things turn and you didn't make the 50, you know what I mean? I'm just telling you, it's better to be safe. There's always going to be another deal down the road. There's always going to be another deal. And you'll know that when you start making a lot of deals and you'll realize, okay, there is profit to be made. I can repeat this success over and over again. And that's what people have done in the mentorship, and that's what I've been doing for the last 41 years. But the point I was getting at a little bit ago is make it put it this way. When you invest somebody, if you're going to invest with somebody, they better have a stellar track record of making money. If they don't, man, shame on you. You're ruining your own future when you invest with somebody that doesn't establish or show you that they know what they're doing. And that's why, like I say, you see young YouTubers, I remember a guy coming to me and he says, man, if I just had $400,000, I could make so much money. And he was trying to get other people to invest with it. And I said, well, what experience do you have investing $400,000? And he just kind of, he doesn't have any experience at all. Listen, it's easy to make money theoretically. Oh, yeah, I could do this. Oh, I could have bought that. Yeah, I could have. That doesn't mean shit. You didn't buy it. And the fact that you didn't, it means that you didn't try. And the fact that you haven't done those deals means you don't have the experience. And it doesn't mean you would have had the nerve, if you feel like it takes nerve. To me, it's just when I buy something, it's a no-brainer. I don't buy anything unless it's worth more. But I know the value. And so when I was talking about Ryan Pineda's deal, what I really don't like about that is the property looked like a barracks. His thumbnail makes it look like a mansion or a castle in multi-story. But then when you go to the top, what he's talking about, it's like a 2-story. It looks like a barracks. It's terrible. And I didn't see any amenities on the property or anything that would get you excited about it. And then I looked into the crime rate. Crime rate was high. Why would anybody buy into a property with a high crime rate? And with potentially interest rates going up. And so since he's bought that property, I think the interest rates have gone up maybe 3%. Has it gone up 3% yet? We've had the 0.75. It's gone up 3 to 4 times. If it went up 4 times, that's 3%. That is
I think they said the average going like 30-year mortgage interest rate right now is like 7.4.
Well, he's going to get a little better deal than that on the commercial end. But either way, my point is this. You're buying a huge property with no real amenities. You're appealing to the lower totem pole people, the lower income group. Guess what? The lower income group is the one getting killed by inflation. They are affected by the cost of gas going up. They're affected by the cost of food going up. When you're affected by gas going up, you don't make enough money, to be honest. You need to make more money. When you're affected by the cost of food, you don't make enough money. Okay, you got to figure out how to make more money. But that's the class of property that they bought. And so he's got tenants that it's just costing them more to eat. It's costing them more to, for gas and all the other things. And there's no room to raise the rent. Because whatever room there was for rent, it's been taken by inflation, by having to survive. You got to eat first, right? And so, again, unless it's a HUD place and if it's a HUD property, maybe a little different there, because then the government will adjust the rate up for you. But either way, in order to sell that property to somebody else, that money is 3%, 3 points more per year on buying that thing than it was 6 months ago. So you've got a property, it's going to be very difficult to get rid of. So you're kind of trapped holding it. You're just trapped holding it because by the interest rate, you're trapped.
So with that, Tom, so I'm looking at like a history chart on the Fed's rates and how fast they've hiked rates or declined rates over the past 25 years. We are in the steepest climb on
Oh
raising
yeah,
the
it's
rates
like this.
ever before.
You know what?
Never
You know what?
before.
It's matching the drop in 2009.
Yeah, that's what I'm seeing here. It is. You're exactly right. It's matching the drop in 2009.
Just going the other way.
And then when we hit 2009, as many people know, we're just flat until 2016, and then very incremental. You have really tiny stair steps, gradual over time,
Right.
which, in my opinion, the market has time to catch up.
Yeah,
and
but
slow
I'm
down.
glad you said that, because to your point, look, the values, I'm sorry, the interest rate shot up, right? It's like a hockey stick going up, and it's doing what it did in 2009 going down. They kept lowering the rate, spur the economy. Now they're trying to kill the economy, and they're doing it. And so they're going to run that up, and I think that you'll probably see that at the rate that interest rates go down will probably be not as fast as the rate of interest rates going back up.
Right.
So
No,
we're
yeah.
stuck for a long term. And it's going to be, there's a lot of great opportunities, and I'm going to share with the class on a lot of what that stuff is coming up. But I'm telling you, it's a great time. It's always a good time to invest, but you got to know what you're doing. For God's sake, don't trust your money with somebody else. Don't throw your money at Grant Cardone. I don't like Grant Cardone, what he offers. And he may even be in trouble too. But in hindsight, actually, maybe Grant may be smart enough that he actually got a lot of his properties refied 6 months ago. Maybe he did, maybe he didn't. If he didn't, he's subject to the same issues everybody else is. If that loan renewed in 5 years, or if he's in an escalating, interest rate, he's in trouble. And same for like the Pineda Fund, which I really don't like. If you notice, Ryan Pineda, he did a video. He visited Grant Cardone. He gave money to Grant Cardone, which I don't know why anybody would give Grant Cardone money, especially a sophisticated investor. Doesn't make any sense to me at all. But to give money to Grant Cardone, and then you're following his footsteps with the fund, you know what I mean? It's just I think maybe that's what he's paying for.
So practically speaking, though, Tom, with a lot of these people that are watching, though, we're talking about these interest rates. It's climbed as faster than it ever has before, according to the map I'm looking at, 25-year history. But with that being said, you say it's still a great time to invest. People are going to be very hesitant, and when you say that, are you saying it's a great time to invest for people that want to do a flip, where they're
it doesn't
getting in and out real quick? Or?
It just depends on your situation. If you have a lot of money, if you can, if you could buy a few $1 million, $10 million, whatever center that gives you a decent return that you're happy with, it's a good time to buy that. It depends on how your cash situation and everything else, I think. But let's go to some of the people that are commenting here. So yeah, everybody knows, if you didn't just come in, the Fed rate has gone up, and let's see. Actually, so I'll give you an example. Look, Russ is making a killer deal right now. Russ is in the class. He's actually, I think he's still in this conversation. But give you an example of how drastic things can change. He was eyeing a property that was a pretty good deal. It was at $750,000. They lowered the price drastically, $200,000. Something gave him a scare. Maybe somebody needed some money. There's things that happen, and all of a sudden you get a big fat bill, and you need money, and so. Maybe that is the case with that seller. Well, all of a sudden the property went from $750, went back up for $550, and Russ is like, hey, it never hurts. You can always offer. What's very difficult when you make an offer is bringing the price down after you made an offer. So you start as low as you can. And so what he did is he came in and he said, hey, I'll give you $350, and they accepted. So they went from $750 to $350. They more than half. They cut the price down more than half. And they just made an adjustment of $200,000 down. And he said, I'll take another $200. And even the agent was like, they're never going to take that. And sure enough, they took it. Never listen to your agent, by the way. Don't listen to a real estate agent. They cannot give you good investment advice. I'm telling you, you can't listen to them. Trust yourself. You got to remember, the incentives for an agent is to get the deal closed. And they don't care how much you pay. They want a piece of that commission. Now, there's some rare exceptions, like Murray, okay?
And an agent is obligated to present that offer.
Yeah, I mean, and so, and the other thing, remember this, an agent has a fiduciary obligation to disclose to the tenant any offer that comes in. Now, you can have situations where an agent is specifically told, don't bring me an offer less than X, and they can turn it down.
Right.
And that's not violating their obligations. I've seen that happen. It happens sometimes.
I talked to an agent today. I gave them a number, and she was kind of skittish about it, but she said, well, we'll present it to them. I said, great, let's present it to them.
Yeah, like I say, there's no reason to ever, you can always go up on your offer. Going down can be more difficult. And there's time you can go down too, I mean, that's kind of a normal, kind of a normal ploy with a lot of investors. And and there's ways to deflect or stop that from, dissuade it from happening. But hang on, but people will make an offer and then they're not sincere. They get it, they tie it up, and then they start to bring you down or start to chop it down. And so it's very important that you test sincerity with the wallet. And when somebody makes you an offer, if you smell something, just don't give them any room. Don't give them any wiggle room to offer, to bring the price down. And there's a lot of tricks we share in the class on that. And if you guys can afford it, please get in the mentorship. But certainly sign up for the webinar. The webinar is awesome. It's filled with people that have made money just like you. You'll be able to identify with a lot of the people that made money in the mentorship. And you could already be a millionaire. Jump in. You're not a millionaire. That's okay. Jump in. We got all walks and people that do different things for a living, some more successful than others. And but you know what? We've seen it turn around quite a bit. We've seen people that are becoming millionaires pretty quick, pretty damn quick.
Yeah, that free webinar Tom's talking about, the link is right below us. You can click on that. Hit the like and subscribe button. We'd really appreciate that, so you guys can stay up to date and get live updates of when we're going live. Hey Tom, question about real estate agents, since we were talking about that. When you call an agent, they typically are going to ask you, are you already working with an agent? Is there an agent you're already working with?
Sure.
So if I'm looking at an area to invest in, is there any issue with me going to multiple agents and tell them what I'm looking for?
Well, there is something,
and
but I'm going to save it for the class, to be honest.
We'll talk about that in the class.
Yeah, there's a lot of things that are out there that now that people are paying me for advice, that I don't just share here on the YouTube channel anymore. But yeah, there's actually some very specific stuff involved with that and you probably know some of it already. But the bottom line is, if you want to buy a piece of property, you can't. I'll share this. You can't just rely on one agent. It'd be foolish to do so. Mm-hmm. It's just foolish. You can't. There's fantastic deals all over this country, all over this world. Okay, we have people in the mentorship in Portugal, different parts of the world, that are making money in England and others. And you just got to understand. And this is what I love about real estate. We got this huge inventory. When you're in business, last thing you want to do is run out of inventory. Inventory is so important. You're selling a product, you're promoting a product, you can make money on the product, and you run out of inventory. It could be phones, it could be, whatever this is, and it doesn't matter. If you run out of inventory, you're dead. The world is full of inventory, and guess what? It turns. People die, people divorce, people, just retire. They change locations. They change jobs. Inventory. Never-ending supply of inventory. It's probably the only thing that never runs out. And so it's so important to understand that. And there's so much to learn, but there's a lot of simple stuff. You can start making money right away, but this is the beauty of it, is you can start and have very inexperienced, and you can still make $1 million in a year. We've already seen it in the class. I'm not just saying it. I mean, I've done it myself, but I'm telling you, other people have done it that are in the mentorship now. It's amazing. It's fantastic. Imagine going from an investment that's $100,000 to 200, and that 200 turns into 800, turns into $1 million, and now you're making $150,000 a year on your investment, starting with zip, okay, or starting with $100,000 or something. Not very much. That can happen.
It's life changing.
It really is life-changing.
It's life changing.
I hate, it's funny because there's so many fake gurus that spoil these words for me because, I say links below, I kind of feel like, ooh, that sounds like a cringy guru.
It's again, I'm in the mentorship. Tom, you've taught me so much. Your book has taught me so much. I've just put to practice.
And you're killing it. He's one of the greatest testimonials there is.
But here's the thing is, and we talked about this the other day. You stopped by my house for Halloween, which is really neat. You saw the kids, and that was cool. But,
thanks for the broad, by the way.
But as we were standing there, I was like, Tom, the money's great, the investments are working, but because I know what I know and what you've taught me, I was able to also secure deals for our best friends and my wife's parents. And now we have a house on either side of us that I helped write up the contract, write the deal, close the deal on.
I'm still mad at you for that, but go ahead.
No, but
it's in one of my neighborhoods.
Yeah, but it's I think it's a great testimony to the fact of the money's great, the lifestyle though will totally change for you, and your opportunity and ability to see things in a completely different way. You'll never see real estate the same way.
No, and that's the thing is that you'll find quickly once you get in the mentorship, you're going to start seeing, and this is the goal from the beginning, is you see things through my eyes, the way that I look at property. And now Chris does it. Listen, Chris has done fantastic. But like he said, he was Halloween. Chris has got a young family. My kids are grown. He's got a young family. Me and my girlfriend took a walk, and my girlfriend actually lives in the same neighborhood as Chris. And we took a walk and walked by, and Chris is grilling hot dogs and giving hot dogs to the adults and kids that are coming by for Halloween, and candy and all the normal stuff. Got a nice little get-together in the driveway, and nice friends and that have kids, similar age, playing together. It's wonderful seeing, boys from the neighborhood get together and run around and playing. It was a beautiful thing. But he's right. At the same time, he secured the house next door to him, okay, and put his best friends in there. And he's got the place on the other side. He did the same thing again, and he's got his in-laws moving in. And his in-laws, and he put a gate in the
we put a gate through the backyard so they can just walk right over to the grandparents' house back and forth.
Yeah. So but see, a good life is by design. I say it all the time. He is setting up a great life. He's got a neighbor on the left and a neighbor on the right, family and friends and people you trust that'll watch out for your property. And he's you know what I mean? He literally got to pick his neighbors. He picked his neighbors, and that's a wonderful thing.
And I did both of those deals without a real estate agent.
And he did, of course, without a real estate agent. Yeah. I got a couple neighbors. I got a neighbor, and I was like, son of a bitch, I shouldn't have let that slip. And one second, just 1 second. I had a couple. You can come in, but anyways, I had a couple deals that I was like, God damn it, I shouldn't let that get away. And what the payoff is that the two deals that slipped away that I probably should have got, and I could have been more aggressive and got, I let them slip, and they turned out to be great neighbors and friends. So, anyways, in hindsight, I'm glad. I'm glad for the neighbors. The $100,000 or $50,000 or whatever I maybe missed on those two deals, well worth what I got.
Also, I'll add this too, because I'm in this spot, and Tom, I know you're. I'm younger than Tom, but obviously, but what's really neat is if you get into real estate investing, depending on where you're at in life and taking care of your parents and looking at their golden years, you can. It's not only helping your lifestyle, but my gosh, you can help your parents in a tremendous way. I'm looking at my mom and dad right now, and I kind of know their financial situation, and their house is paid off and all that great stuff. They don't want to risk too much with investing and whatnot. And I'm like, okay, your money, I get it. But there might come a point in time where I need to help take care of my mom or dad financially. Yeah. And this is a vehicle I see that's it's going to be reliable for that.
It is. It 100% is. And, like I say, those are the things that, like I say, you have options. You just have so many more options when you make money. That's just how it is. But anyways, hey, look, we'll cut this short. You guys that are watching, go to the link below. Go to the webinar. Get in the As soon as you sign up, I think you get sent a link right away, and you'll be able to watch it. And stay motivated. Don't be negative. Don't be like my grandpa guy. He just dissuaded you from looking or doing anything. He was a very sour old man. He didn't have any money when he grew up. He just, everything was a bad deal. No matter, he didn't look at it. He'd say, "Oh no, don't buy triplexes." And I will look. I just bought a sixplex. It's pretty good. He goes, "Oh well, sixplexes are okay, but not tri." You know, he doesn't know what he's talking about. And that's the problem. There's people all around you that don't know what the hell they're doing. That are very quick to give advice. You can't listen to those people. You know, I like Mark Wahlberg, right? You know, the actor, you know, fit dude. And I love this quoting him on this, but he said, "Look, I'm not going to listen to anybody that's not in better shape than me." In other words, he's not going to take advice on how to get in physically good shape from somebody that's not in better shape than him, and that's a good standard to hold. You know, but the other thing is, just because somebody's richer than you doesn't mean they're going to have good advice. You might be the target. You might be the money, and that's what you got to be aware of. There's plenty of people. I call them anteaters, because they eat hundreds of lives in each meal. And I'm talking about people eating their income, eating a 25-year-old's $1,000, or eating multiple couples $5,000. You know, that's your seed capital. And don't let some fake guru anteater come in there and just lick you up and eat you and gobble you up in your $1,000 and $5,000. That's a lot to you. That could be the beginning of making millions. Okay? To them, it's a meal. It's a bottle of wine. Okay? But they're taking hundreds of these kinds of chunks at a time. And I can do that too, but I won't do that. Yeah. I don't even let anybody in my mentorship. Anybody that's watching here knows it's filled out and coming into the mentorship. I say, "How much money you got?" And I'm not asking, "How much can I take you for?" which is what these other guys ask for. I'm saying, if you haven't saved 10 grand and you're 30 years old, 40 years old, you got bigger problems than I can help you with right now. You need to figure out how to discipline yourself to save that money, or how to get some skills to make a decent wage to save that money, because you got to have a certain amount of discipline. And that's why I say, when I see somebody that signs up and they've saved 80 grand and they're 30 years old, or 40 or 50 grand, you know, in their 30s, 20s or whatever, I'm blown away. I'm saying, yes, you qualify. You qualify because you've shown that you got the discipline to save money from wages, which takes a lot of discipline. You know, most people just piss their money away, live check to check, and then they wake up one day and, you know, it just gets worse.
Somebody asked me the other day, when I told them about a big deal I just made, they're like, "What are you going to do with all that money?" And I said, all of that money is in an account that I cannot touch, and the only thing I can do is roll it into more real estate right now.
Yeah, well, that's your accommodator. And again, you know, the worst thing in the world is, and I hate seeing it, but, you know, see people start out doing the right thing and they buy a home, and then 10 years goes by, and they look at that equity that they've created, whether they bought it right or not, just time took care of it, and they got this equity, and they look at it as a way to bail out all their stupid spending. And then they pay off their boat, and they pay off their bikes, they pay off their cars, they pay off all the shit they shouldn't have bought.
Well, and then they look back 10, 20, 30 years, and they say, "Man, what I could have done with all that time, and my money could have been somewhere or invested somewhere that was making a lot of money."
Yeah. No, hey, listen, hey, we're going into this downturn. I mean, again, I hate to look forward to it. I know it's going to be tough on some people, but you know, I just bought a cool Land Cruiser. I've been looking for a Land Cruiser for like 2 years. You know, I bought a classic Land Cruiser. They're going to deliver it, and also thanks again to Jose. Jose is in the mentorship. He was actually in Illinois, and I said, "Hey, I found a great deal over here," and he said, "I'll take a look at it for you." And he's a car guy too. And he went over and he said, "Tom, this thing's fantastic." So I immediately bank wired the money, and I got that thing. It's coming to me on a trailer.
It's nice.
It's cool, man. I like it.
I like them.
Yeah, I like the you know, the Land Cruiser we're talking about. It's like a tank. It's really really fantastic.
Well, those that have been burned by some of these other, you know, just scammers, if you will, before. What's really unfortunate, Tom, is they had the real estate bug. They bit in the wrong place, and so if that's you, I have a buddy. He gave $15,000 to someone and got nothing in return.
Oh,
and I told him, I said, "Man, that's not the end of the story for you. There's still another chance for you. There's another way to do this." And I tried to convince him otherwise, and he's so gun shy to do anything else with anyone
Yeah,
else.
well, it
And
jades you. These guys are jaded. They get burned. Thank God. Look, Mike Stizza is somebody who just on the mentorship, and he's like, we just released a video he did today. I don't know if that got into the interview, but we did a half-hour interview, but Chris edited 5 minutes of it. And the thing is, he told me in that interview that he paid somebody $17,000,
tens of thousands of dollars.
and yeah, but he's told me specifically, and he said, Tommy goes, it's not even a fraction of what of what your course is worth, and of course my course is much less. But again, my success in large part is seeing you guys win. That's all, believe me, that's what I want my legacy to be. I don't want to be an anteater, right, where I just sucked up and ate all these souls and took their income from, young men and destroyed their future by taking their seed capital. That ain't going to be me. Yeah. I want to help young guys and gals make money. It's wonderful to see a guy that's going, oh man, makes a few $100,000. Okay, I see the light. I see the light, Tom. I can, put the kids through college. I can, pay off the mortgage. I can, I got choices. I'm going to be able to retire comfortably. That's what I want. And, anyways.
Well, hey, Tom, what do you think? And we can talk about this offline, but I was thinking maybe Friday we could take some live calls from people. If anybody's watched this far along, we could take some live calls maybe on Friday for people that have questions about real estate or investing.
Yeah. We were playing with it. Unfortunately right now, Chris usually leaves around 2:30, and most of the people that are the best students, to be honest, the ones that work, and they're not available until after 4. 4 or 5. Yeah, and I'm not saying anything. I'm just saying. But ideally, we may have to do it remote while you're at home with kids.
That's
or
fine.
something.
Yeah, we can figure it out.
Yeah, but yeah. Hey, please you hit that subscribe button again, if you would. Hit that like button, and it helps the channel if you care to help the channel. But jump in, watch that free webinar. If you want to take the mentorship survey, take the mentorship survey, and I will certainly assess. There's just a few questions in there. I'll assess it, and I will have a conversation with you. First thing I'm going to tell you is go buy the book if you don't have the book, because I can't tell you if you're a good fit for mentorship. I can tell you that, hey, yeah, you know what? You saved money, you got some cash, you sound like a good fit, but you're really going to have to read the book. The book's, $10. Get the book and read it. You can read it free. You can read part of it for free right now. Just go to Amazon and look it up in Kindle edition or the other, and you can watch part of it for free. And if it turns you on, gets you excited like I think it should, or it does me, and a lot of other people, then have a look at it. But we'll call it quits, and we'll see you guys next week. Thanks.